Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to Chart This with Dave Keller. I'm your host, Dave Keller, coming to you from Missoula, Montana. Actually on the road, so apologize for the suboptimal lighting conditions and questionable background, but I'm on the road with my family. Given the fact that it's Fed Day, pretty important day, just wanted to debrief on what I saw and heard, given a chance to review the charts now that we're settled into the region of the University of Montana here. Looking at the market conditions today, of course, Fed Day. And so, the question is, what sort of reaction do we get? What sort of change do we get relative to what we experienced on Tuesday into Wednesday? Wednesday, of course, we had the Trump bump. We had the significant rally after Trump is declared the winner. What happens the day after? And as we've mentioned many times on the show, right, there's that big move day when some news comes out, something like the elections. The day after can often be very, very telling because a lot of times there's that initial reaction. But when everyone has a chance to kind of sleep on that day and digest what we learned, kind of process things, today a little different because we also had a Fed meeting with no surprise 25 basis point cut as expected. So then it's all about what sort of follow through do we get, right? Do you see additional buyers coming in? Do you see a lack of willing buyers? Do you see selling in names that have gapped higher? And I would say, some of the general themes that I observed, generally speaking, technology, FANG sectors, communication services, still quite strong, right? The NASDAQ outperforming the Dow today, with the NASDAQ up 1.5%, the Dow flat for the day, the S&P 500 in the middle, up about 0.75%, not quite to 6,000, but very close. As we look through some of the charts, look through the market recap here in a brief abbreviated chart this episode, you'll see what I mean with some short-term distribution in some of those areas that were quite strong. And some things that came down quite a bit on Wednesday, something like gold and silver, actually bouncing back very nicely today. All right, let's get through a quick market recap here. Small caps, the worst performer. So NASDAQ up 1.5%, the Dow flat, the S&P 600 small cap index down almost 0.75%. The VIX continuing to come down a full VIX point further down with the VIX just above 15. So we remain in a low volatility environment. Overall conditions okay. Interest rates overall all moving lower. Now, this is obviously, most likely related to the Fed meeting today. Bonds were rallying going into the Fed announcements. There wasn't a lot of change, just kind of choppiness in the last hour or two of trading. This was more about the anticipation, I think. And so on Wednesday's session, we had a big spike in rates as bonds sold off after Trump was declared the winner. A lot of his policies interpreted as being more inflationary. And so dollar up, rates up, all kind of in line with that general perspective. Today, kind of a mean reversion. You saw rates come back down. The 10-year yield finished today around 4.34, the 5-year point around 4.2%, and the long bond yield just around 4.54. The dollar was almost a full percent lower. The UUP was down about 0.8%. So again, those were things that were different on Wednesday, and then Thursday, kind of a mean reversion. Same thing on the commodities page. You can see that gold and silver both up from Wednesday. Gold, the GLD was up about 1.6%, decent recovery after yesterday's drop. Silver up 2.4%. So those are two areas of the market that came off. They've been obviously very strong in 2024. Wednesday, sort of mean reverting lower. Today, kind of recovering some of those losses. Cryptocurrencies actually continue to show quite a bit of strength here. Bitcoin currently trading above 76,000. We're recording this around 6 p.m. Eastern or so. So you can see that generally cryptos are moving higher. Big spike higher. Bitcoin almost got to 77,000 for the first time in history, currently around 76,000. I would argue that is a primary uptrend and a breakout in Bitcoin. Full disclosure, I do own Bitcoin and Ethereum, also the GLD that we covered moments ago. Looking at the S&P sectors, you can see 8 of the 11 in the green. Technology up 1.7%. Communication services and consumer discretionary up 1.3%. So the return of the FANG sectors, the MAG 7, whatever we want to call it, mega cap growth getting it done today and leading the way higher. We can see how the NASDAQ 100, kind of outperforming everything else. Only 3 of the S&P sectors were down today, and those were the 3 that were up big on Wednesday, right? So Wednesday, you have that initial reaction to the Trump victory. Financials, industrials, energy were 1, 2, 3 up significantly. Some of those banks were up, 15, 20% in the case of Discover Financial Services, DFS. Today, not a huge down day, but giving back some of those gains, right? So financials down 1.6%, industrials down 0.6, energy down 0.5%. Now, that sort of mean reversion move, super common. And when you see stocks or ETFs or things that have a significant move because of a big news event, often there's an overreaction. You can usually expect the next day to sort of unwind a bit of that crazy optimism that we experienced. Looking at those magnificent seven names, you can see Meta Platforms up almost 3.5%. Tesla just under 3%. Alphabet up 2.4%. Worst performer of this bunch was Microsoft, and it was still up 1.25%. So mega cap growth, very much in the driver's seat as we again process what we learned from the Fed and kind of continue on. All right, just to continue the show here, we'll do a quick market carpet review. Then we'll look at some charts, and then I'll wrap it up. And I apologize, I can't do the show live here today. I've got to kind of record it and troubleshoot some internet issues here in Montana, but hopefully we'll have things squared away very, very soon. Looking in the upper left corner, and again, just general perception here is obviously growth, obviously quite strong. You can see some of the biggest, brightest green is in some of the biggest boxes concentrated in the upper left corner. Those are the FANG sectors like technology, like communication services, Amazon, Tesla, Home Depot, three biggest weights in the XLY, all pretty decent up days. Look at areas like financial. Now, these are things that were absolutely ripping to the upside on Wednesday. Thursday kind of coming back a bit. Industrials, honestly, very mixed. You have like a Boeing up 2.6%, but generally speaking, that was not a particularly strong sector. So to be honest with you, in many ways, kind of a change from what we saw on Wednesday. Wednesday was a real resurgence in financials, industrials, and energy today, giving back some of those gains, but still pretty strong for the week. Mega cap growth and large cap growth. Also some healthcare worth noting. Those are where you saw some of the biggest areas of strength here. All right. What can we learn from looking at some of the individual charts? Things that I would highlight just on my cursory review of the market action today. Obviously, the S&P gapped higher on Wednesday post-election. The question on a day like today, what sort of follow through do you get as we process the Fed meeting? S&P making a new all-time high, not quite getting above 6,000, but getting within a rounding error of that significant level. So again, as we've mentioned, right, the primary trend in the S&P is up. We keep making higher highs and higher lows. When you have something like this, pulling back and finding support at a descending 50-day moving average, holding above a recent swing low, that's still a primary uptrend. As we've talked about, the line in the sand of 56.50 for now still holding. That's the level we would watch, and for now remains okay. Wanted to point out the fact that the dollar, which had surged on Wednesday, gave back almost all of that rally on Thursday's session. Crude oil actually drifted slightly higher, but not by much. And gold, which on a Wednesday session had broken below trendline support, on Thursday popping back above. So I would be very interested to see if Friday going into the beginning of next week, if gold can recover that trend line support and show that this was just a fluke, a brief breakdown of a key support level. If not, really have to start questioning whether gold is a good place to be, at least on the tactical time frame. Rates come down a little bit today. Now, they rallied on Wednesday post-election. Today coming down. Now, as the Fed is lowering rates, remember, they're lowering the short end of the curve. The longer end of the curve, like the 10-year and the long bond yield, are really driven more by investor sentiment and supply and demand and those kind of things. And it's worth noting that rates came down a little bit, sort of in concert with what you saw with the short end of the curve coming down. So we've seen a significant uptrend in rates from mid-September now to early November. Today, rates actually coming off a little bit. That is an emerging story too, very much I would encourage you to pay attention to, because a lot of the things that were really compelling here, like home builders, were so compelling because rates have been coming down, and that's not what happened in the month of October. On Wednesday's show, we highlighted some of the mega cap growth names that were breaking out, particularly NVIDIA, Amazon, and Netflix. I wanted to keep all of these on the chart list for today, just to show that all three of them indeed followed through today. So when you have a big break above key resistance, my question is the next day, do you see further follow through? Do you see further confirmation that we're breaking out? And I would say today we're seeing that confirmation on mega cap growth. So large cap growth Still a really good opportunity. Let's finish off with a couple sort of actionable ideas, things that are just breaking out. HubSpot gapping higher about 7.8%. They reported earnings on Wednesday. And today's gap higher completes that rotation through the 200-day moving average, and now the previous highs in April and May very much in play. That's pretty much where we're at right now. So HubSpot above 700, I would say, emerges from that resistance and most likely much further upside. Overall, extremely overbought with an RSI above 80. Before you say, isn't that a bad thing? It actually is not. Look at the last couple times the RSI pushed above 80 here mid-December of 2023. That's before another multi-month move higher. Here we just tagged the 80% or 80 level for the RSI here in June of 2023. We moved on to further highs over the next 6 to 8 weeks. So extremely overbought, we would always say, is the good overbought. That means that the trend overall is quite strong. The momentum is quite strong. And while you might have a tactical pullback, usually those are good opportunities to ride the next leg higher after a pullback. Lyft is another name gapping higher, up about 23% today. So this is a significant push above the 200-day moving average after testing it on Wednesday's session. Similar to the previous chart of HubSpot, we're now testing those 2024 highs. I'm skeptical as to whether we could just plow right to new all-time highs and not at least have some sort of pullback off of that extreme level. But overall, the trend is solid. The momentum is good. Keep an eye there. I wrote an article earlier today for CNBC Pro. We talked about Take Two. I just want to highlight the fact that today, post earnings up 7.5%, gapping above 170. And I would say that clears a significant basing pattern. And overall, again, this is a multi-month, almost a 12-month pattern where we've been kind of sideways. And now we're finally breaking out. Check the weekly chart on that as well. Finally, Warner Brothers Discovery, ticker WBD. This is one of those that, while we have so many names like Meta and others that are in these sustained uptrends, WBD is one that is arguably just emerging just in the last week. It's cleared the 200-day moving average after making a higher low in October, with the RSI bouncing off of the 40 level, which is pretty good support in a bull market phase. We've now gapped above that resistance from the July and September highs. I would argue this gap higher could be the beginning of a new primary uptrend. Higher highs and higher lows are bullish, friends. Thanks again so much, everyone. I appreciate you hanging with me with a shortened travel day sort of chart this episode. I hope this helped you just sort of track what was happening with the major averages. Again, I don't have time to talk too much about the Fed announcement. No real surprise, though. I think a lot of the drama was in the comments at the press conference afterwards. But in terms of the policy decisions, I would say no real surprise. There really wasn't a significant after sort of reaction afterwards. We'll see what happens on Friday's session and into early next week. But we've somehow made it through a very news-heavy week with the markets, generally speaking, and risk assets in a primary uptrend. As a reminder, we'll do a mailbag episode for Friday, November 8th. Monday is actually a travel day for me getting back to Seattle, so I'll keep you updated on when we'll have another episode. Not sure if I'll get one on Monday, but definitely we'll be back and better than ever at the home studio for Tuesday of next week. And until then, make sure you check out my recent podcast episodes. I sat down earlier this week with Tyler Wood of Go No Go Charts. Some great thoughts about systematic trend following versus subjective trend following. I thought some of the charts he shared were magnificent. And also Adrian Day of Adrian Day Asset Management, making a lot of complex and confusing economic concepts pretty easy to understand and digestible. So enjoy those. Lots more conversations to come. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts. Have a good night.